Hang Seng is powering through. It's up around 2% as we speak.
The Nifty took support of the 20-day moving average. That number is 19,577.
They think now the move will be structural on the stock versus the cyclical business that they have been talking about.
First take on the Nifty is up about 30 odd points.
From a macro growth perspective, this is one of the most remarkable junctures I have seen in India's development.
We have got a contract of 120 train sets and at the rate of 120 crores, and these train sets will be manufactured at Latur.
We have been guiding for a 25 plus kind of a % growth rate in the past, and I think that's something that we should continue to be able to look at.
Even if repo rates were to start coming down, let me say in due course, which I think it will, that a year from now or whenever, our bank will not be much affected.
The Nifty is now at the doorsteps of 19,700. And it's not just power.
I believe that they will on the growth path. At the same time, what is also encouraging is they are doing it at a very low cash burn.
A fresh organizational restructuring, and this is the first major change by the new CEO of TCS.
For the markets, near the day's high, we have 65-point uptick on the Nifty.
Well, that's the day so far, and it has been, a quiet day. And I'm saying that even as the Nifty is up about 70 points or so. We're coming to you from the CNBC-TV18 News studios, and I am Prashant. With me, my colleagues Rima and Surabhi. Guys, hi.
Hi, afternoon. We're practically at the day's high, right? It started off on the quieter note, but we've built up some momentum, especially in the broader markets.
Yeah, absolutely. And it's not looking all that bad. I mean, actually, the market dipped. We did see that dip early on. The low was made at 9:30. And then it's been a steady up move. I mean, 9:30 to 11:30. We saw a very steady up move. All of the 70 points that you see on the screen came through in that two-hour period. After 11:30, the market's not gone anywhere. I mean, it's been pretty steady. There was one attempt about half an hour back when we made a fresh high. You can see that on your screen. But post 11:30, it's pretty much plateaued out. We said this in the morning. The defense of the 20-day moving average on Friday was important. I mean, 20-day, it looked tricky at one point, but the fact is that the Nifty, for example, bounced about 70 points by close on Friday from the 20-day moving average. Nifty Bank also closed above the 20-day, and that's good. Gains today are led by TCS, Infosys, HDFC Bank, and Reliance. I mean, Pharma, which was such a large mover, especially last Thursday and to a lesser degree on Friday as well, is nowhere in the picture. Rotation happens pretty fast from one sector to the other. Broader markets are doing well. Although, one thing I noticed is that, you got to go down the market cap curve even more. If you look at some of the big volume-led gainers, they are largely a newer set which are evolving. Both mid-cap and small-cap indices are up about 0.75%. We'll talk about that part of the market a great deal over the next 60 minutes. Rima.
Hi, but it's all about power, right? It was all about power yesterday, and it's powering through even today. So today, the big gainer is NTPC as the margins look good for the company in Q1 on the back of lower fuel costs. The stock has surged 13.5%. This month, it's up 15%. Another big mover has been Power Grid, and in the broader markets, REC 23% gain in the month of July. And even now, on an intraday basis, if you pull up something like an SJVN, you would see it surged to the day's high. There is a lot of buying coming through in that. Another pocket which is looking quite good is real estate. The Nifty Realty Index itself is the top sectoral gainer, and in that, names like Kolte Patel, Puravankara, Brigade are all showing you gains of about 2 to 3%. And we are awaiting numbers from Oberoi Realty in that pack.
Absolutely. Real estate is good. Power is good. So are railways, by the way. Railway stocks have been up and about. RVNL, of course, had news around it. But even beyond RVNL, if you're looking at stocks like IRFC, for instance, it's been up and about right from the morning. Even now, holding on to a very decent gain of about 7.5%. That's RVNL. They've got their JV sorted with their Russian partners, moving ahead on the Vande Bharat order. That's IRFC. BEML. BEML does a lot more beyond railways, but railways does form a significant part of their order book, metros and railways. So that's a stock up about 12% as well. So power is a smart space. Metals are not bad at all. Remember in the morning we had weak manufacturing data coming from China, PMI data, but the market lapped it up thinking that maybe there'll be more policy stimulus. And that's one reason why the metal side of the market has been doing very well. Both ferrous and non-ferrous, that's the Nifty Metal Index, which has also been quite a significant contributor today. So interesting moves coming through. Of course, Maruti's numbers will be discussed and debated. That's something that we need to talk about as those numbers come in. The others include a Ujjivan Small Finance Bank, Five-Star Finance. These are some of the other financials where we've seen gains pretty much throughout the session today. So all in all, the mid-cap side of the market is buzzing, and gains on the mid-cap index are outpowering the gains on the Nifty for the month of July. 5.5% up on the mid-cap index, or 3.5% up on the Nifty. Well, with that, let's move on and get the strategies for the last hour of trade. Mitesh Thakkar is with us as always. Mitesh, good afternoon. So Nifty holding quite nicely above now 19,700. What's the call and what's the trade?
Actually, good morning. My sense was that I think the Nifty may not, will find it difficult to climb 19,700, 720. And if it does that, then we are heading towards the upper end of the range, which is about 19,820, 850 zone. So in that sense, I think, on the index, if somebody wants to take a long position, I would suggest about a 40-point stop loss. It's not a very convincing kind of a trade, but yeah, I think that's, a possible outcome that the index might just drop around and therefore it might head towards the upper end of the range. So one may take a small position with the stop below 19,680 on the spot and look at, levels of 19,820, 850 as the first target here. So that's something, which can be done. And on the stock side, I think that's where the action is. Metals and power stocks are buzzing. So I have a buy on Steel Authority. A sale is a buy with the stop at 93 for targets of 97.5, 98 as the first target area. And also a buy on Shriram Transport Finance. That's, I think, clearly showing good traction. It's just trying to break out from the last 2 days of upward sloping consolidation. And typically these kind of moves can be very fast. So in that sense, I think, Shriram Transport Finance should be bought. I think there's some problem loading the chart. If you can just give me a second, I'll just, give the exact levels of the target and the area over here. But yeah, just a minute.
Okay, all right, got that. Thanks.
I got it. Can I just cover it? Yeah.
Yeah.
Shriram Transport Finance is buy with the stop at 1844 for targets of 1925.
Got that. Thanks, Mitesh, very much for the calls. We'll come back to you in about half an hour's time. One stock on our radar is United Breweries. Now, here is where the numbers didn't really add up. Volumes were weak, and overall, it was a lackluster quarter. We have Surabhi with more details. So, Surabhi, what all went wrong with UB this time?
To start with, what went wrong was the volume. Now, they saw a volume decline of 12%, which analysts did not expect. Analysts expected anywhere between a single-digit volume growth, So that's where primarily the results went wrong, which led to a revenue decline of 7% on a year-on-year basis. Gross profit margins was also down 380 basis points, but that was largely expected due to the inflationary pressure on the input cost. The management does say that the volatility in the input costs will persist in the near future as well. The EBITDA was down 16%, margins were down 110 basis points, came in at 9.8%. Now, the volumes were down due to route to market changes in Telangana and Haryana, and the capacity constraints in the peak season in the region of Telangana, which also led to a volume decline. Additionally, Heineken, the global parent, also declared their results for the first half, and they have lowered their profit forecast for the rest of the year. They said the beer volumes for the first half were down nearly 6%, and the demand in the APAC region was soft. So, demand mutedness and also volume decline due to supply chain challenges are some of the key concerns for United Breweries. There is a conference call at 4 p.m., so we'll await for some additional management commentary from there as well.
Okay, thank you very much for that. That's United Breweries for you. The stock is down about 2.5%. Hemang Jani is with us on the show now. Hemang, had a look at United Breweries numbers?
I think the numbers were slightly subdued, and the sense one is getting is that though on the volume part or on the business part, things are looking good, but there is a bit of a patchiness in the numbers when you look at the few quarters. Also, we feel that the margins have been under pressure because of the way the glass and barley prices have really moved up in the past few months. So we think that it's not a story where one can really take a long-term call, but from a technical perspective, it can provide a good 7-10% kind of an upside opportunity.
I just put up Wellspun Wellspun India, the chart of Wellspun India, it's a sharp spike. Numbers came at about, I think, 225 or so. And it's, I think, almost all of the move has come in after the earnings have come through. So stocks hit a high of, I think, about 112. Is turned around a little bit. But even from that point, it's up a full 10 rupees from the time the results came through. You know, this is what I was talking about. Lots of these smaller names which I was not seeing on the screen over the last couple of days. Look at something like a Dawat, about 7% gains there. Big volumes. MMTC is a new PSU name which has come through, which was not participating so far. You know, Power Mesh we were highlighting since the morning. There's Midhani, which is up, 7.5%, 8%. Something called LSIL, 20% gains. Stocks at about, 46 rupees. Huge volumes on it. Wellspun, I already pointed out. NBCC is a new one into the mix in terms of, you know, stuff which is doing well. BLS, Bombay, London, Singapore, and the visa processing company, BLS, that's up 14.5%, 243. So newer names, basically. And then, of course, I mean, IRFC and BEML have been top of the charts for the last couple of hours or so. So, yeah, I mean, there is a bit of the old but a lot new which is moving around as well. Hemang, any results which have caught your eye? What are you guys pushing to clients in terms of new insights, in terms of new ideas?
Prashant, I think NTPC is a stock which has seen a good amount of uptake, and the numbers over the weekend were good. And we think that both from a power deficit cycle, which is caused by the secular rise in the peak demand, as well as the kind of plans that NTPC has on the renewable part. You know, there is some sort of interest which is there, and which is what we also like at this point of time. Apart from that, the entire PSU stroke, railway defense, that theme has actually caught a lot of attention, and the kind of order flow that we are seeing, is quite good. So RVNL from that perspective is looking quite interesting. And we think that even from a this Power Finance Corporation and all, because of the kind of rebalancing which is going to happen in FTSE, people are kind of looking at those ideas.
Okay, all right, got that, Hemang. Well, quite a few stocks on the move. We have, of course, NTPC, which is the big one. There's also Power Grid, which is up and about. And some of the metal names are also standing tall. TCS is the other one, with, of course, the change that we've seen in terms of the structure and the reporting in the company. Hemang, just want to get your thoughts in on some of these metal names that have had a good run. Largely, I think it's the whole China buzz and more stimulus. But would this be a space that you'd look at from a more fundamental perspective, given the way the prices are at present?
Yeah, so Surabhi, what has happened is that China's stimulus being one, trigger that the market is looking at. Apart from that, if you see the numbers, they were quite stable, and having seen a big underperformance in the last about 1 quarter, people are looking out for newer themes which haven't really moved up as much, and where you can see incremental positive triggers, coming through. So from that perspective, some of these names, maybe Tata Steel, Hindalco. Some of the PSU, metal companies like Hindustan Copper, that is where people are kind of, little more positive. And I think it does provide a good, short-term trading opportunity.
Hemang, do stay on. Need to slip into a very short break. There is a cut that you are seeing on Zomato, so that's down close to about 3%. RBL Bank is lower in trade, a bit sluggish. They met the management of M&M. There was a one-on-one interaction over the weekend, and RBL Bank has taken a bit of a knock. That's down close to about 2%. Bajaj Hindustan is down 10%. Get into a break. On the other side, we'll continue our conversation with Hemang. We'll also invite Rupen Rajguru of Julius Baer on the other side. Welcome back. 19,700 plus on the Nifty, so holding there with a gain of about 0.3%. One of the big movers today is TCS, and that's up close to about 1.8%. The news is that the company has announced a new operating structure. There has been an organizational restructuring. Remember, K. Krithivasan took over as the CEO of the company on 1st of June, and we kept asking him, are there going to be any big changes? And at that time, he kind of indicated no. He said that, TCS is a well-oiled, run company and things will go on. But under him, what we've seen now is the first big organizational restructuring. So last year, in the early part of last year, the erstwhile CEO, the outgoing CEO, Rajesh Gopinathan, had effected a new restructuring, whereby TCS had divided itself into 4 groups based on the account size, which basically means there was an incubation group for very small accounts with a size of less than $20 million. They had one head. Then there was another head for accounts which ranged between $20 million to $100 million. Then you had another head for projects which were above, client sizes which were above $100 million. So the concern which was raised by people of this structure was that when one client moves from sub $20 million to say $50 million, then the reporting head changes. So the ownership, in a way, comes down. Now, under K. Krithivasan, what we've learned is that this has been changed. They're going back to the traditional structure, which means a vertical. There's going to be a BFSI head, there's going to be a manufacturing head, there's going to be a retail. So heads of the company are going to be based on the vertical or on the geography. One change that he's made is that BFSI is further split based on the geography. So typically you have one BFSI head, but now for TCS, you're going to have a BFSI North America head, and you are going to have a BFSI head for Europe, UK, and the rest of the region, Australia. And that's the list of the new leadership as they take over the other important verticals. So that's been one big change that we've seen from K. Krithivasan. Hemang, does this have any implications for, the long-term picture, for the way you look at TCS, this change that has been brought about by K. Krithivasan? Would you expect more changes?
I think, market is sensing that things have finally, in terms of structure, falling in place with both, vertical-wise restructuring in place, also geography-wise. And also the fact that if you look at this quarterly numbers, TCS numbers were slightly better within the lot. And there is a sense that the company is in a much better position to deal with the current scenario. So, there is a sense that it makes more sense to go with the company where there is slightly better visibility at this point of time.
No, get that. Hemang, stay with us. The other one which is selling off is Piramal Enterprises, down about 6% or so. I just want to sort of play out the sound bites of Ajay Piramal, caught up with him earlier. Listen in.
Even now, after this buyback, our debt equity only goes to 1.3 times.
Okay.
Therefore, even if I take a growth of 20-25% for the next 4 or 5 years, I don't think we will need any more equity. We are bringing out a new wholesale 2.0, which already has a book size of about 3,500 crores. So in that sense, it's a mixed strategy. The competition for lending to real estate with HDFC is moving away from this market is now reduced, and therefore there are opportunities.
Okay, that's Ajay Piramal there. Gale numbers are there at the bottom of the screen. It seems like a miss first cut on the bottom line. The revenues seem to be slightly higher at 32,000 odd crores, but net profits have come in at 1,412 crores as compared to the poll, which put that number at 1,655 crores or so. So this is coming in just now. There was, of course, that UBS note, I think, earlier today, around which I think the market was reacting to that note. Perhaps expectations of numbers, difficult to segregate what was in the price, but at the first cut level, these numbers, EBITDA numbers there as well. There is a miss of almost 200 crores on the EBITDA front, which is not small, which is just under 10%, a miss on the EBITDA as compared to consensus expectations. So top line seems to be okay, but the bottom line level, things are a miss. 7.5% margins as compared to 8.2%, which was the CNBC-TV18 expectations. So that is Gas Authority. Hemang, just throwing this to you. Numbers are just coming in, and we'll have Sonal join us in just a bit to take us through details. But any thoughts at all? Gas Authority.
Gas Authority, there is a sense that, in the current scheme of things, the companies having a combination of the gas and the pipeline network are, better placed. And the margins part, where there was a bit of an uncertainty, I think there has been some sort of a clarity, which is definitely good. So I think along with the PSU theme, GAIL is extremely well placed at this point of time.
Okay, that note that Prashant was alluding to, that was a UBS note. They did what is called a double upgrade. Even before these numbers came in, UBS went, full on, positive. Their target, and this is, by the way, a target that they came up with before the numbers, I repeat, 150 rupees from 80. So straight away, stepping up on the pedestal as far as GAIL goes. UPL, we were expecting a very muted quarter because most of these companies on the chemical side, agrochemical side, they've really had a tough quarter, and I don't think UPL is any exception. And these numbers are looking even worse than a poll which was anyway very, very muted given the lackluster expectations, and that's a stock that's selling off. Hemang, on the subject of chemical companies, I think each and every one of them has disappointed. I remember SRF's numbers, Navin Fluorine, UPL is coming in. The cycle is simply not favorable. But would you look at buying any of these businesses now? Because, that's the reason why the stocks are not quoting at the kind of hefty premiums they were at, let's say, towards the middle of 22 or end of 21.
No, I think, Sulbhi, the valuation will be a function of how things are going to look like on the earnings front, over the next 12 months. And when there is so much of uncertainty, and as you rightly pointed out, that most of the companies are reporting dismal set of numbers. Some are also saying that it will take time, like for example, SRF is saying that it will take at least 2 quarters to really see any kind of meaningful traction. So I think in the intervening period, the valuations of some of these companies continue to be on a higher side, whether you look at SRF or Navin Fluorine, Deepak Nitrite, so on and so forth. So I think it makes sense to stay away from this, pocket at this point.
Okay, the margin, by the way, for UPL is at 17.8%, and that could explain why the stock is now trying to recover as well. If you do a tick by tick of UPL, the first reaction was very, very severe because there's a huge miss at the profit level. But the margin, they somehow managed to keep it intact. It's still come down. I think the corresponding margin levels at the same time last year were closer to 20-21%. So it's still a significant decline, but not as bad as what the market was fearing. We have Sonal joining in. Sonal, before you get a chance to even look at the UPL numbers, let's go to the previous one. GAIL, what did you make of that?
For GAIL, Sulbhi, it was an expectation that quarter on quarter it will be a big recovery that will come through. There is a recovery, but slightly lower than what the street was working with. So if you are looking at the standalone numbers as well, profits are around 1400 crore rupees, which compares with a poll of 1655 crore rupees. This time around, it was an expectation that it is the natural gas transmission business which will drive growth for the company. And if you look at it, natural gas EBIT this time has come in at 1024 crore rupees, which compares with a poll of 1,087 crore rupees. So largely in line with what the street was working with. Even if we talk about the petrochemicals business, that is the one where a miss has come by. Petchem business EBIT was expected at 100 crore rupees, but it is actually a loss of 100 crore rupees. So that's where we can attribute that miss coming in through from as well. And this is something that we saw in IOC as well. They had reported a loss in the petchem business, despite the fact that the petchem cycle had recovered. So looks like it is not as good for the Indian companies so far as well. If we talk about the LPG LHC business, there the company has reported an EBIT of around 202 crore rupees, which compares with a poll of around 300 crore rupees. So the miss really has come in from their petchem and LPG business, while the natural gas marketing and the natural gas transmission business have been in line with what the street was working with. So yes, the profit miss versus estimates has come in from these two segments. Of course, we'll be watching out for management commentary as far as what the Gazprom deliveries are looking like, because that was something that really led to big decline in their numbers in the quarter gone by, and there were a lot of one-offs as well. They had done a provision for rerouting of Kochi-Bangalore pipeline, whether that has recovered or not, and also the deallocation that had happened because of APM gas allocation. So a couple of things where we will need some management commentary. So yes, it is a slight miss versus what the street was working with, but yes, quarter on quarter there's a good recovery in GAIL's numbers.
All right, thanks very much, Sonal, for that. And we're just coming back to you on UPL as well. in the next 2 minutes. By the way, GAIL is, if anything, has lost about 3 or 4 rupees from the time that the results actually came through. Rupen Rajguru is head of equity investments and strategy at Julius Baer. He's joining us now. Rupen, good afternoon. Good to have you with us here. I was just noticing that you do like chemicals as a space, and you think that that's a space you could buy. It's, in a way, at least for a lot of these names, been completely down and out. Navin Florin, for example, numbers just came out. They were a big miss. Stock barely budged because it's already, it's kind of bombed out. What do you like here in this space, and what would you do?
So, hi, afternoon, Prashant. Chemical as a specialty chemical as a whole, I would say this industry is going through a cyclical slowdown. It's a industry which we believe is a structural industry which is going through a cyclical slowdown. Why do I say structural? Because the big theme out there is that all the Indian companies, A, are working towards import substitution, and B, they all are gaining, will be gaining market share from China, the big, China plus one story. So if I were to break up the companies in their life cycle, probably pre-COVID until the run up to the COVID, they had a phenomenal run. There was both, margin expansion, PE re-rating, and thereafter in last 2 years, all of these companies have earmarked, huge capex. If you see, some of the companies have earmarked capex, which is more than the total gross block they have done till date. So, what will happen is whenever you do earmark a capex, your ROEs and return ratios tend to come down, and plus also there is a time required to set up the new facilities. So all in all, if I were to just use the old cricketing parlance, they are in that middle overs. So you had the first 15 overs in which you scored big runs. Probably it's a consolidation phase. For next 1 or 2 quarters, I don't think so the earnings will come through, but the stocks, these are the time to pick up these stocks from a 2 to 3 year perspective, because we believe 25 onwards we will see a huge a momentum both in the top line as well as bottom line. So that's the big thing we are playing.
Got that. By the way, the stock which is reversing now is UPL. It dipped into the red. It's a fresh 52-week low on UPL after the company has lowered the FY24 revenue and EBITDA guidance. They're now looking at a just 1 to 5% top-line growth and the EBITDA growth at 3 to 7%. And Q2 is also going to be subdued for them. It's only in H2 that they are anticipating a recovery. Sonal, you've had a look at the UPL numbers. Take us through the numbers and the commentary and the guidance.
Well, guidance is the most important bit, Reema, and you spoke about it already. But yes, it has come in as a dampener because cutting their revenue growth guidance from 4 to 8% to just half, that's around 1 to 5% from an agrochemical major, definitely talks about how much pressure that we are seeing in the global industry as well. They've cut their FY24 EBITDA guidance as well from 6 to 10% to 3 to 7%, and guidance was something that we were watching out for as well. They say they anticipate demand to remain subdued in Q2 of FY24. However, they expect performance to be sequentially better and to recover completely, or at least to some level from second half of FY24 as well, and that is where they think that things will reverse. As far as why the profit number is lower versus the EBITDA number, that's because there have been one-offs. The company has accounted for a 57 crore rupees loss from a joint venture, and also there is an exceptional item of 19 crore that is a loss versus profit that came in the previous 2 quarters as well. So that is the reason why EBITDA margins are at 17.7%. Profits are much lower than what the street was working with. In terms of their presentation as well, if we talk about what the growth has looked like across regions, in Latin America it's down 15%, in North America it's down 56%, in Europe it's down 19%, rest of the world is down 10%. That's UPL Corporation. Now they've started giving their numbers in terms of segments as well. But yes, they say there's significant decline in herbicide volume and prices and product bans in Europe, and that is something which will continue to impact for next couple of quarters. Some recovery is what they're expecting only in the second half. They do say demand at the grower level continues to be strong and channel inventory is normalizing, but that will only be seen from the second half of FY24. In the first half, they will continue to see some pressure, and that's the reason some impact on the stock as well.
Okay, got that. A lot of volatility on the UPL stock there. Thank you, Sonal. Lots of inputs coming in. The big headline being there, the guidance cut for FY24. Ruben, I wanted to get your view on financials. I believe that you like some of the larger banks. But my question is more to do with NBFCs and what's the read-through for you as we go through a lot of the earnings. Now, Piramal, Mahindra and Mahindra Financial have been slightly disappointing. Bajaj Finance, the growth was very good, but I think there's a question mark on how much can they maintain margins. Would you look at NBFCs at all right now? And if yes, then which category?
Hi, good afternoon, Surbhi. What we saw last year, financials did pretty well, both from a stock market as well as from a corporate performance perspective, and that momentum continues. And what we have seen once market got a hint that we are through or we are done with the rate hike cycle, we have clearly seen big amount of momentum, not only in NBFCs but also in MFIs and others. So NBFC as a space, typically in an environment like this, they will do well. And we have seen, while there are some aberrations here and there, but at an aggregate level, entire financial pack, including NBFCs, have done pretty well. But markets are always forward-looking, and the movement is always fast and furious. So at this juncture, the reason why we like the big four banks is because if you see this year, majority of them have been a relative underperformer. And now when market are at its all-time high and the overall valuation of market is probably a one standard deviation above its long-term average, financials, if I were to look through, on an average, the price to book of the top 4, top 5 bank is actually below its 10-year average. The reason being their performance have been phenomenal. And, here in this cycle, we believe, probably a few quarters still, the earnings momentum will be there. So while NBFCs will also do well, but at this juncture, we would prefer large financials or the big four financials vis-a-vis NBFCs.
Rupen, would you be kind enough to share the QSR name that you like? Is it Jubilant Food? I mean, just kind of talk to us about not whether one should buy or not, but why you like that name, with the name.
Prashant, I would refrain from naming any company. But, here again, it's you see, what is the big story from an India perspective? Consumption is a big story. Currently, what's ailing consumption and more so the rural consumption, that's impacting all the companies which have reasonably good presence out there. Again, QSR as a space, we saw, COVID time again, a massive, built up, they all, built up their overall tech network and they did phenomenally well. And again, some of these, because the high inflationary environment is there, and the middle level consumption is getting impacted. I would not call QSR as a low level consumption or at the premium level, but in the mid segment, they have got impacted. But as a big story from an India perspective, the big theme wherein if our per capita income is going to double over next 3 to 4 years, the discretionary spend is going to go up, and QSR as a segment will be a natural beneficiary out of it. I think the leader there has been a relative underperformer. And we believe that the leader has built other adjacencies, and we believe some of the other segments in which they are already there, they probably can easily scale up. They can use the same rule book as the way they did for their main franchise, and I think they can build a really big good line of business from the other franchise as well. So net I would say we like the leader out there. That leader has been a relative underperformer, but we believe next 2-3 years should be good for them.
Okay, that's QSR. Let me turn the focus to the exact opposite. I'm talking old economy, large industrial / capex kind of plays. Would you be looking at this side of the market? Any selection, any choices here? And Rupen, if you could throw in a word on power. I don't know if that's an area of interest for you, but suddenly it seems as people are looking for ideas, and that explains what's going on with the Power Grid, NTPC, and some of the others.
Surbhi, you are absolutely right. Power was a name which everybody had forgotten till 2 years back, or rather 1.5 years back, and suddenly it's come back into vogue. But if you see, some of the utilities earlier, probably during COVID time, they got impacted. I think the overall ESG theme was very, very heavy, and I think globally all the companies which are into what you call energy, which are not into renewables, have got impacted. So some of these thermal power utility got significantly derated. Probably they came down to 0.6, 0.7 book. And suddenly, globally, we have seen all these industries which got negatively impacted by ESG has done pretty well because they are solid business, cash throwing, high dividend yield. All these characteristics were always there. But when there are all around, dearth of ideas, we suddenly saw a big gush of, I would say, investor interest into that segment, and that has led to re-rating of all that segment. So power, and plus a market is also enthused by, because all these erstwhile thermal utilities are focusing a lot on the renewable side. So incrementally, all their capacities are coming into that. So that's one. And secondly, from a government perspective, while thrust on renewables is there, but the T&D as a business is something which is, I would say, a non-controversial business, and I think that's where we are seeing good amount of interest. Coming to your original question on capex and industrials, that segment has been the star performer for last 2-3 years, right? Investment as a theme has done really well in the Indian market. The stocks have got significantly re-rated. From here on, I would say the returns of stocks would be probably mimicking the earnings growth, or might be slightly lower than the earnings growth, because the re-rating has been quite significant. And if there is any disappointment, probably we might see a de-rating happening there. So I would say the story is very much there, but from here on, expect returns which would be mimicking the earnings growth, and don't expect that 2x, 3x returns which we have got, because those that re-rating is now behind us.
Rupen, thank you very much for joining in. Need to get into a break. On the other side, we'll get you a few BTST calls from our technical experts. Stay tuned.
Welcome back. So the market's holding on to its gains, 19,757, trying to actually build on them, moving from strength to strength, this index. In fact, beyond power and beyond metals, the other big names to look at would be an L&T right now, which is contributing. Of course, TCS has been quite smart, and Reliance as well. A lot of pillars to the market rally today. Mitesh is back with us. Mitesh, so any fresh ideas? Look at that move on L&T. If you could just throw in a comment, either on NTPC or an L&T, some of these traditional economy stocks have been really rocking away. And anything else that's come up on your screen?
See, NTPC was in buy list a couple of days back, but in the last 2 days, it's run up very fast compared to the beta it holds. And it's run up from the moving averages. So I think now is not the time to buy. Day before, on Friday, it was trading, it made a low of 119.5. Today it's at about 218. So nearly 10% kind of rallies happened. If somebody's holding the stock, I would recommend a stop at about 214 and continue to hold the stock. And I think on the targets on the upside could be in excess of around 230 to about 232. And maybe even higher because it's trading in all-time high levels. We don't have the ceiling, only the extension possibilities. So 232 is the next level over here. L&T, again, similar situation, run up too much, not the best time to enter. If somebody has a stock, hold it with the trailed stop loss. And on my stock observation list, I think today I have Adani Port, which has come on the radar for a BTST kind of a trade. I recommend to take a BTST here with a stop at 770 for targets of around 790. And similarly, I think another Adani Group stock, which is ACC, is a BTST with a stop at 2000 for 2050 as a target.
Okay, Adani Ports and ACC. ACC has been doing well on Friday, did well, and today also stocks up 3%. By the way, look at the market. 115, 116 odd points. This is the 3 p.m. effect coming through and strong. We were up 60 points, and just like that, the market's added another, 50 points or so very quickly. I mean, so the market took off at 258 or so. And from that point, another 50, 60 points coming through. So this is quite something. So the one stock which is done, I think, bulk of the heavy lifting is Reliance, which is now contributing a full 20 points to the Nifty move. Here again, I mean, all of it coming through after 3 o'clock. There you go. That's the stock which is making most of the difference. TCS and Infosys were up in the morning when we started at 2:30 as well. So incrementally, it's not done very much. But L&T is the other one. Reliance and L&T, the intraday will tell you the story. So stock was at, I think, 26.60. And we've moved up about 20-25 rupees on L&T in the last 10 minutes or so of trade. So that's the other one, which is seeing a very sharp spike. Nothing else. I mean, these two names, Reliance and L&T, doing it for the index right now. Any thoughts, Mitesh, briefly? Reliance?
Reliance, I think, post that demerger, I think we saw some kind of profit booking here. But if you look at the readjusted chart, the highest weekly closing which the stock has had is around 2,600, 2,570, 2,600 levels. And I think we are just on the verge of breaking above that. I think once this breakout takes place, about 2,600, then I think I would look at least a target of 2,850.
Okay, and that's the big one in terms of weights. Mitesh, we'll come back to you. There's 14 minutes to go for close. Tomorrow when we come back, we'll have the auto sales numbers for the month of July. Sonia is here with what we are expecting. Sonia.
Well, thanks a lot for that. So, for the month of July, we are expecting a bit of a slowdown in certain pockets, whether it's the passenger vehicle space or even the two-wheeler space in July. In fact, the wholesales for the industry, for the passenger vehicle industry, will be in low single digits. We're expecting a growth of just 3% on a year-on-year basis for the passenger vehicle industry at about 353,000 units. The demand has been tepid within the passenger vehicle space, especially if you look at the small car segment, and discounts have inched up further, waiting periods have lowered, so it's not been a great setup in the month of July. If you move to two-wheeler demand as well, recovery has remained slow, especially given a delayed festive season. The two-wheeler wholesales will barely rise about 1% on a year-on-year basis. The only segment which has done well this time is medium and heavy commercial vehicles. Over there, there's a healthy growth that we've seen because of infrastructure spending and a healthy fleet operator profitability. Now, the MHCV industry volumes are expected to grow about 11% on a year-on-year basis. Let's take a look quickly at the company-wise expectations. For Ashok Leyland and Tata Motors, it will be completely opposite ends of the spectrum. Ashok Leyland will do a growth of 8%, while Tata Motors could see a fall of of 6% year on year. In the two-wheeler space, if you look at it, the one that will perform the best could be Eicher Motors with Royal Enfield, a growth of 33%. While on the losing end, you have Bajaj Auto, which is still seeing some pressure because of exports, so down almost about 8% over there. Moving to passenger vehicles, Maruti Suzuki, a 7% year-on-year growth is what Nomura is estimating, while M&M, the total auto sales will be up almost about 12%. So a mixed bag, slowdown in passenger vehicles and two-wheelers, while you see a good growth in the MHCV sector. Back to you.
Okay, thank you very much for that. Still awaiting Maruti's numbers. We'll slip into a very short break. On the other side, we'll be joined by Mayuresh Joshi. So stay tuned. Welcome back. Welspun India is a stock reacting to its numbers. There is a top-line growth of 10.6%, but very sharp margin expansion. EBITDA margins at 14.2, which compares with 8.6. And there's a big jump in the profitability, 161 crore versus about 22 crore that we've seen in the comparable quarter of last year. So the stock is reacting quite favorably. It's currently up close to about 9%, though there has been a bit of an increase in the company's net debt. So the overall debt picture has deteriorated a tad bit, and maybe that explains why the stock has also slipped a bit from the day's high. Mayuresh Joshi is with us on the show now. Mayuresh, just a while back, we had numbers from UPL, and on expected lines, it's been a very, very weak set of numbers. I think the profits are down more than 80%. The company slashed its revenue EBITDA target, but we were anticipating weak numbers. Globally, companies have been bringing down their forecasts because they're sitting on high-cost inventory, which will take some time to run off. But is this a good time, this downturn that we are seeing in agrochemical companies? Is it a good time to accumulate?
Afternoon, Reba. No, I think it is going to take some time. I think generally for the chemical space as well as the agrochemical space, because what you're probably seeing or expected to see is weak demand is probably getting played out in terms of the end product pricing. Obviously, input costs have come down, but the end product prices have come down even further, which is probably the reason why you're probably seeing the kind of cuts that are coming through for most chemical stroke agrochemical players. The second aspect is also the inventory destocking that is probably happening across regions at this point of time. And because of that, you're probably expected to see a lot of negative operating leverage play out on balance sheet. So yeah, extremely disappointing in terms of the guidance cut that UPL has probably given. With the El Nino conditions expected to now play out, my own sense is that the first half is an absolute washout. Second half recovery really depends on a lot of factors at play. And therefore, I think on our own lens, it trades well below all pivot levels. We would watch out for management commentary, but would largely give it a miss looking at Q1.
By the way, today is a really strong PSU day. Then this move is cutting across sectors. On the large cap screen, it's obviously ONGC, Power Grid. We're discussing NTPC. Beyond the index, I mean, look at even smaller names like a Hindustan Copper, NBCC, Shipping Corporation of India. So it's a big move on a lot of PSU stocks today. Some interesting buying taking place. Mayuresh, hi, good afternoon. What's your favorite PSU pick? One or two if you have any?
Afternoon, Surabhi. So I think PSU banks is something that we are liking at Markets with India. One of the stocks within the space is Bank of Maharashtra. And the reason why we like it is because both on a year-on-year as well as on a quarter-on-quarter basis, the stock has given a fabulous performance. If you look at the NII growth, there is a 7% quarter-on-quarter growth to almost 2,350 odd crores. Annualized credit costs have actually come down 2 bips, 1.25%. If you probably look at the cost-to-income ratios, they stay at 37 odd percent compared to 38 odd percent. Asset quality pressures have come down. GNPA is at 2.28 versus 2.5%. Net NPA is at 0.24 versus 0.25. And therefore, the restructured book, which is a construct in terms of how the balance sheet will look like going forward, stays at 2.15% with the management expecting to get it below 2 odd percent as well. Capital raise, Surabhi, is the only thing which probably plagues a few of these mid-cap PSU banks, but to a certain extent, they have a runaway growth ahead of them. So I think Bank of Maharashtra is something that we'll continue to like. Within the same space, in the PSU undertaking basket, I think Bank of Baroda is the other stock that we probably like out of the universe. Numbers expected to be reasonable over the next couple of years. And with the expectations in terms of the SME to book, expected to stay at around 0.65 times. And even with the new ECL norms that are expected to come through, a lot of provisioning on the standard plus restructured book has already probably happened at this juncture, which probably gives them a leeway for good growth. Out of the others, I think stocks like NTPC, Power Grid can definitely be held on. I think both in terms of the aspects of earnings growth and a good dividend yield which supports.
Got that. Mayuresh, any thoughts on names like Sula? It's up about 5.5% today. Sula Vineyards.
So, afternoon, Prashant, I think the numbers were quite reasonable. The other aspect in terms of both the wine tourism aspect, is expected to grow at a very, very reasonable pace. Again, they've got a very, very niche kind of a offering into the market when it comes to wines, both in terms of the B2C as well as the B2B part of the business. And therefore, the expectations in terms of volume growth should sustain going forward. Management sounds, Prashant, very, very hopeful in terms of maintaining margins in those high 20s. And therefore, how will they manage that is something that I probably need to figure out over the next few quarters, and the street as well. If they're able to do that, my own sense is that operating leverage plays onto their balance sheet. Obviously, I think valuations are not cheap any longer. I think it has moved substantially over the past few months. And therefore, anybody holding can definitely hold on. Any fresh investments definitely need to pull back.
Okay, got it. Thanks very much, Mayuresh. Appreciate you joining in. Thanks, as always, for being here on CNBC-TV18. Well, 100 points, so this is looking good. We started, when we started, we were up 60. That is, it started at 230 last hour, and we end with a full 110-point gain, 19,574. The banks, the Nifty Bank Index up 0.4%. So pretty much in line with what the Nifty did, but the mid and the small cap parts of the market did better. The mid cap index at 230 was up about 0.7. It's up 1%. So if anything, it picked up pace. Small cap index was similar. That also ends just under 1% higher. So strong overall large caps and broader markets as well.
The star sector was power. NTPC and Power Grid are the top two Nifty gainers. ONGC rallies 3%, closes at a fresh 52-week high as Brent crude prices are now trading well above $85 per barrel. IT's had a good session led by Tech Mahindra, TCS. And TCS, you had those organizational changes. Metals, Tata Steel and Hindalco take top honors in that pack. And Maruti saw some buying ahead of numbers. So Maruti's numbers still awaited, but the stock ends higher. On the losing side, Apollo Hospitals weak, Britannia under pressure, and you had some cuts visible in Kotak Mahindra Bank despite the clarification coming in.
A field day for mid-caps, really. The bell's going off. I'll just cap it off with some names. And most of them are from the industrial side or PSU side, basically manufacturing. By the way, remember, Vesuvius came out with very smart numbers last week. It has put on another 8.5% today, taking its monthly gain to 55%. The other major stock movers included a BEML, NBCC, gains of about 7% to 11% on these stocks. Mishra, Dhatu, IRFC, like I've been saying, MMTC as well. I mean, these low float names as well. It has been an out-and-out PSU day today, looking very good. Railways as a theme, even beyond some of the PSU names, did well. HBL Power Systems, for instance, up about 8%. So overall, a pretty good day for a lot of the mid-caps. So that's how we are wrapping up things. Monday starts off on a very positive note with the Nifty scaling 19,740. With that, it's a wrap on Closing Bell. So thank you from the entire team, but don't go anywhere. A very special conversation with Suresh Narayan and Chairman and MD of Nestle India coming up after the break.